Even though we're just starting the new year, soon it will be the spring market when it comes to real estate. Now, last year, home prices in many parts of the GTHA went up by 30%. But what will 2022 look like, and will an increase in interest rates cool things off? Well, Sean Cowan has the answers.
The real estate market is kind of like a pandemic. You don't really know what it's going to look like until it's passed.
It seemed to be really competitive. Like, we put offers in for a few different places that we didn't get, and then we got lucky with one. And
I saw a house listed at $299 in the East End of Hamilton last week that received 58 offers and ended up going $300,000 over list.
So will that type of competition continue into this year?
I think the big story of 2022, the economic story of 2022, is going to be interest rates at last going up.
Marvin Ryder from the DeGroote School of Business thinks that if interest rates do go up, it could initially create a rush of people wanting to get into the market before the increase happens. But eventually,
as these interest rates go up, we're going to cool the housing market. And by that, I mean freeze prices where they are. We don't want to see them fall back 10% or 15%. That could actually lead to very dire economic consequences and another recession.
The Canadian Real Estate Association says housing prices will continue to increase this year, but at a much more gradual pace. Last year, most home prices went up by more than 20%. The Real Estate Association says the average price of a home across Canada this year is projected to increase by 7.6% nationally.
We're going to see still an inventory problem. We've still got low inventory. We've got a supply problem. And we've got a strong demand in the market, and it'll probably cause our prices to have pressure upward once again.
And the average price of a home in Canada is $720,000. Locally, it's a little bit higher. The average price of a home in the Hamilton-Burlington area is $969,000.